the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares began the day in the green, tracking activities in global markets. So the Straits Times Index opened 1.1% higher at 3,843 points after some 54 million securities changed hands in the broader market. Now let's take you through the closing numbers. The STI closed further in the green, up 1.44% at 3,855 points. In terms of value turnover, we are looking at 1.81 billion Sing dollars. Now gainers outnumbered losers, 282 versus 140. Top advances for today, we've got here DBS, UOB and Southern Alliance. And top decliners, we've got here Shangri-La Hong Kong Dollars, Multicam and Reclaims Global. Now, in terms of counters to watch, we do have Singtel, and we'll tell you why in just a bit. But elsewhere from how Samsung Electronics operating profits surged nearly 130% year-on-year in the fourth quarter of 2024, to Apple topping Wall Street's estimates even as iPhone sales fell. We've got more corporate and international headlines in focus. Also on deck, more on the outlook of Chinese AI startup DeepSeek. Now, lots happening in the markets. So for more market moves and views on a Friday, I'm joined by Sunny Soh, Lead Technical Analyst, Capital Markets and Investor Education at SIAS. Sunny, welcome.
Hi, Tian Tian. Happy New Year. Thanks for having me back on the show today.
Great to have you back. And Sunny, let's start with the Singapore stock market as usual. How did the STI fare today after the holidays and as investors sort of digest the Fed's latest decision to hold rates? I understand that Fed Chair Jerome Powell said they are not in a rush, or officials are not in a rush to cut rates. Any thoughts on that?
I think on our STI index today, things are looking actually very positive. I'm not sure if it's because of the Lunar New Year holidays, but we do see overnight in the U.S. market that the S&P 500 was up more than 0.5%, with the Dow and tech-heavy Nasdaq up as well. So the positive momentum overnight in the U.S. was actually carried over to the STI index, and we see that STI is up more than 50 points, or more than 1.4% today. Big movers on the STI I see on my screen now include Yangzijiang Shipbuilding and Sembcorp Industry, up 3.4% and 2.7% respectively. And our local banks, our three local banks, were also up around 2% each. And for this short-term trading week, right, our STI actually overcome the 0.2% loss that we saw last week. So we are up about 1.4% for this week as well. And today being the last trading day of the month, right, STI is up about 1.8%. So it's indeed a good start to the year so far. And this is STI third consecutive winning month. And on your question that the U.S. Fed decided to hold rates unchanged, and U.S. Fed Chair Jerome Powell said that the community is in no rush to cut rates, I believe this is widely expected by economists and investors as well. The Fed post-meeting statement actually offered a more cautious view towards the current sticky inflation level, and the unemployment rate has also stabilized at a low level in recent months. So U.S. labor market conditions remains very solid, and the tone of the statement was, in my opinion, a little bit hawkish, and I don't think we will likely see a rate cut happening soon until at least the second half of this year. But we still have some time from now to the next meeting in March, and data between now and then will set the tone for the next big decision, as recently Donald Trump has been taking the spotlight now with his policies and tariff threats.
I see. We'll definitely talk more about the US later on, Sunny, but let's zoom in on some of the counters to watch on the SGX. We have Singtel, because Singtel's Australian subsidiary Optus signed this 1.95 billion Aussie dollars committed revolving credit facility with 12 banks. How significant is this looking at the counter's share price movements today? Pretty positive, I must say.
Yes, looking at the Singtel share price today, which is up more than 2%, I think investors are not too concerned, not expecting any big impact from this announcement. Lately, in last October, we see that Optus was fined Aussie dollars 12 million for failing to provide emergency call services to thousands of people during a nationwide outage in 2023. And in October last year, Optus was also sued by the Australian Competition and Consumer Commission over the alleged sales misconduct. So Optus has been struggling to restore its reputation since the September of 2022 cyber attack that compromised the data for more than 1 million customers, prompting a nationwide demand for stricter privacy regulation. So this committed revolving credit facility will give Optus some financial cushion, giving their investors more confidence in the company's ability to navigate its current challenges that it's facing and potentially investing in improving its services and consumer experience. And Singtel is also on track to continue to drive strong shareholders' returns with their 10 billion Sing dollars value unlocking initiative that includes paring down stakes in regional associate and non-core fixed assets. So this has been progressing steadily and very well and should now have about Sing dollars 12 to 13 billion in monetizable assets that could be returned to shareholders, and that could explain the positive performance on Singtel shares today. Yeah. So Singtel's return on invested capital continue to improve, driven by improved profitability from its core business, operational performance, and strong revenue growth from its tech services and data center businesses. And analysts are also predicting that Singtel is expected to post higher revenue and underlying net profit for third quarter, driven by increased contribution from Optus, with consensus target price for Singtel now around the $3.73 level.
I see. Well, Sunny, another counter to watch, also starting with the letter S and the year of snake, is Singapore Airlines. Now, what is happening here is that the Competition and Consumer Commission of Singapore, it has granted conditional approval of the proposed joint venture between SIA and Deutsche Lufthansa. Now, how much of a boost will this be for SIA looking into the shorter term? I mean, shares were up some, was it 1.2% when I last checked? 1.274.
Yes, 1.27 for 1.27%, and about 8 cents today to $6.36. So I think this joint venture will provide a very significant boost for SIA. The joint venture will allow SIA to access Lufthansa's extensive network across Europe and beyond, and providing more flight options and destinations for SIA passengers. So this increase in connectivity will also attract more travelers, potentially leading to higher passenger numbers and revenue for SIA. So the joint venture is expected to lead to more competitive fares for passengers, as the two airlines can now coordinate pricing and offer more attractive deals. And this could attract price-sensitive travelers and increase SIA market share further. So the joint venture will allow SIA and Lufthansa to better utilize their assets as well, such as aircraft and personnel, by sharing their resources and coordinating their operations. And this could lead to further cost saving and increased efficiency, which could benefit SIA bottom line. Then by expanding their partnership with Lufthansa, SIA can strengthen its position in the global aviation market, particularly in Europe, and this could help SIA compete more effectively against other major airlines and potentially attract more lucrative partnership in the future. So with the share price up 8 cents today, or 1.27%, I think this is good news for SIA shareholders.
All right. So, Sunny, let's set our sights across the region. All eyes on South Korea today, given how markets in mainland China and Hong Kong and in Taiwan, they're still closed for the Chinese New Year holidays. Now, the benchmark Kospi, I believe, was down about 1% as investors sort of react to the launch of DeepSeek's AI models earlier. Now, any notable movements in Asia for today, though?
Yes, indeed, you are right. Looking at the regional markets, I see that the ASX is up, the Nikkei is up, the Nifty and the Hang Seng are all up, and only the South Korean index Kospi retreated today to a 2-week low. I believe this is because their semiconductor giants are facing mounting pressure from the global competition, as well as some supply chain concerns that's dragging down their overall market, because Samsung and SK Hynix are some of the two biggest companies on the Kospi index. So this downbeat sentiment came amid fears over the impact of DeepSeek on global semiconductor sector, and of course concern over an anticipated shift in U.S. trade policies, and that weighed heavily on investors' sentiment in Korea today. So Samsung Electronics and SK Hynix actually face uncertainty over their U.S. investment after the Howard Lutnick, the nominee for U.S. Commerce Secretary, vowed to review the subsidies granted under former President Joe Biden's CHIPS Act. And U.S. President now Donald Trump also criticized this CHIPS Act, focusing his remarks on TSMC. So Samsung Electronics is investing US $37 billion in Texas, with $4.74 billion promised in subsidy, while SK Hynix secured a $485 million subsidy for a $3.87 billion project in Indiana. So investors may be very concerned that both semiconductor giant may lose their subsidy for their investment in US under Donald Trump watch. So the shares of Samsung Electronics actually fell over 2% today, while those of SK Hynix actually plunged close to 10% at market close. So that is a very drastic or a sort of a different performance from the other Asian markets that we are seeing.
You talked about Samsung Electronics. Let's go straight into that before we talk more about DeepSeek later on. Sunny, Samsung Electronics at the same time, it also reported earnings. Operating profits surged nearly 130% year-on-year in the fourth quarter of 2024. So in a regulatory filing, Samsung said operating profit from October to December was 6.5 trillion won or 6.1 billion Sing dollars, up from that 2.82 trillion won seen a year ago. But yet, if we look at Q4's operating profit, that was lower than the previous quarter. So what does it say about Samsung's competitiveness in the global chips market then?
Well, I think Samsung 129% year-on-year surge in operating profit definitely demonstrates its ability to generate very strong earnings and, of course, being very adaptable to market fluctuation as well as industry challenges, especially from its competitor of SK Hynix. So tech giant NVIDIA, whose semiconductor chip has actually powered the AI industry, has been relying mostly on SK Hynix, which is a major competitor of Samsung as its main supplier for the high bandwidth memory chip for the AI GPUs. And Samsung has been seen in recent years has been struggling to meet NVIDIA's requirement. So the rapidly increasing demand for AI chips, right, heightens the technological difficulty for Samsung in developing new custom-made chips for their customers like NVIDIA in a timely manner. And that has eroded Samsung tech leadership in the past few years. But Bloomberg reported today, I noted that Samsung has obtained approval to supply a version of its 5th generation high bandwidth memory chip to NVIDIA. So Samsung is definitely playing catch-up now in terms of competitiveness, and Samsung would need to accelerate their development and production of AI-specific chips to regain market shares and meet the growing demand. And this would require them to focus a lot more on their R&D and manufacturing capabilities. But overall, I think Samsung Q4 results does suggest that they are still a major player in the chip market with very strong earnings, and their commitment to R&D and innovation will be crucial for them to maintain their competitiveness in the long run against its competitor.
All right. And if you're just tuning in, we're now in conversation with Sunny Soh, Lead Technical Analyst, Capital Markets and Investor Education at SIAS. Well, Sunny, let's go on to DeepSeek. A lot of things happening there surrounding the AI startup. I mean, global companies, for one thing, they are reportedly moving to restrict employees' access to DeepSeek tools due to concerns about potential data leaks. You've got the U.S. Commerce Department also looking into whether DeepSeek has been using restricted U.S. chips. And at the same time, OpenAI also came forward and said DeepSeek may have inappropriately used its data for its solutions. Another everything, everywhere, all at once kind of situation here, Sunny. But what would you say is the outlook for DeepSeek on the whole, looking at the volatilities here?
Yes, DeepSeek news coming in from all angles. So I'm taking my time to decipher what is the outlook for DeepSeek now. So I think DeepSeek, currently the outlook may be uncertain. It's fraught with both potential that it can bring and, of course, the risk that come with it as well. So DeepSeek AI model, the R1, right, actually demonstrated the potential to disrupt the AI landscape by offering comparable performance to established giants like OpenAI at a fraction of the cost. And this could significantly impact the AI chip market and lead to maybe wider adoption of AI technologies due to the lower in cost. And DeepSeek innovative training techniques, right, have allowed them to achieve impressive results with significantly lower computation costs. This could become a new standard in the AI industry, driving down costs and accelerating AI development. But there are also immediate risks that DeepSeek would need to address now, because data security concerns and potential leaks of information to the Chinese government were the main concerns some of the companies are flagging out now. So this has raised serious questions about the company commitment to data privacy, and this could, if not addressed well, it could significantly hinder its global expansion. There are also doubts about the true cost of DeepSeek AI development and whether their claim of efficiency is sustainable. So the company open source approach, right, and restriction on new users to use Chinese data and information further complicates its accessibility and the trust of its app and usability in the global market. And not to mention US and China trade tension over technology could further complicate matters. So DeepSeek growth as well as its impact and its ability to access critical resources and markets could be impacted by a US-China relationship as well. But I believe DeepSeek does have the potential to become a major player in the AI market, and the company will need to address the data security concerns and build trust with international partners and countries and navigate this complex geopolitical landscape. And if they can overcome this obstacle, DeepSeek could become really a force or even a market leader in the AI world.
I see. And before we let you go, Sunny, let's talk more about Apple, because Apple beat Wall Street's quarterly profit estimates yesterday. And at the same time, its CFO said that the company expects sales to rise in the low to mid-single-digit range for the current fiscal second quarter, after accounting for impact from a strong dollar. So how far do you agree with that positive outlook given Apple's cautious approach towards AI?
I think Apple's cautious approach towards AI now, being seen as a bit of a lagger, can be a double-edged sword when it's compared to its company outlook. So Apple CEO team also said during the earnings call that Apple's prudent and deliberate approach towards capital expenditure in AI is actually benefiting the company. While it seems like a drawback in the face of the AI boom among its peers like Google and Microsoft, there are compelling arguments for why Apple's strategy could actually be a strength for them in the long run. So Apple prioritized seamless integration of its app, its capability, and now the AI features into its existing products, making them more user-friendly and more integrated. This actually helps to avoid overwhelming users with very complex prompt engineering and ensure AI becomes a useful tool and not a disruptive force. So by emphasizing on-device AI processing, and Apple actually minimize data collection on their end and, of course, avoid potential privacy breaches associated with some of the cloud-based AI models. So this actually aligns very strongly with Apple emphasis on user privacy, which is a key differentiator for Apple among its competitors. So this approach avoids the hype and potential backlash associated with the rapid AI adoption, just like what we see in DeepSeek now, by focusing on the gradual integration and user-centric features. They aim to build long-term trust and secure a very sustainable market position for themselves. So this is actually a very calculated move, aiming to build long-term value through user-centric innovation and data privacy. But ultimately, the success of Apple AI strategy will depend on its ability to balance out this cautious integration with timely innovation to catch up with its peers and effectively address the evolving AI landscape as a whole.
I suppose lots to watch indeed. Thank you so much for those insights, Sunny. That was Sunny Soh, Lead Technical Analyst, Capital Markets and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.